Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Barricane faces sharp decline despite Crypto.com listing. Report: Receipts Depository Corp plans to broaden offerings with XRP integration. Market flooded with over 700 copycat tokens after Trump meme coin debut. Arizona lawmakers advocate for stricter regulations to combat Bitcoin ATM fraud. Crypto investment surge: Taproot Wizard secures $30 million, Reservoir gains $14 million. Barricane faces sharp decline despite Crypto.com listing. Barricane's Barra token has experienced a significant downturn, even after being listed on several prominent centralized exchanges such as MEXC, Upbit, and Bithum. Initially developed by its pseudonymous creator, Smokey, Barricane officially debuted on February 6 following over a year of anticipation. During this period, the project managed to secure over $100 million in investment. The foundation of Barricane can be traced back to the Bong Bears NFT collection, which first emerged on the Ethereum blockchain on August 26, 2021. Comprising 100 uniquely designed, cannabis-inspired bear NFTs, this collection laid the groundwork for the broader Barricane ecosystem. A key aspect that sets Barricane apart is its innovative proof of liquidity consensus model, distinguishing it from traditional proof-of-stake networks. This model has drawn attention within the crypto space, with supporters praising its potential to redefine blockchain mechanics. However, some industry insiders have expressed skepticism regarding Barricane's initial fundraising approach. According to Blockworks, critics argue that the project's decision to first introduce NFTs before pivoting to blockchain infrastructure development raises questions about its long-term vision. Even with the added exposure from recent exchange listings, the downward trend in Barra's price has sparked discussions about market sentiment and the viability of its liquidity-based operational framework. Investors and analysts continue to assess whether Barricane's economic model can sustain long-term stability in the ever-evolving crypto landscape. Report: Receipts Depository Corp plans to broaden offerings with XRP integration. Receipts Depository Corp. (RDC) is set to enhance its product portfolio by incorporating XRP, allowing institutions to engage with the asset through a U.S.-regulated financial framework. RDC has yet to issue an official statement in response to inquiries from Crypto.news regarding this development. This expansion follows RDC's landmark introduction of the first Bitcoin Depository Receipt, BTCDR, nearly a year ago. This pioneering financial instrument enabled institutional investors to gain exposure to Bitcoin within the regulatory framework of the U.S. securities market. BTC doctors were designed based on the structure of American Depository Receipts, ADRs, providing qualified institutional buyers, QIBs, with a mechanism to hold and trade Bitcoin using the same infrastructure that supports traditional securities transactions. Similarly, XRP-backed securities will be processed and cleared via the Depository Trust Company, DTC, ensuring compliance with established regulatory protocols and enhancing institutional accessibility to the digital asset. The leadership team behind RDC includes co-founders Ankit Mehta, Bryant Kim, and Ashan Narain, all of whom previously held positions at Citigroup. The firm has received backing from notable financial entities, including asset management giant Franklin Templeton, investment banking and brokerage firm BTIG, and venture capital firm Broadhaven Ventures. With this strategic move, RDC continues to bridge the gap between cryptocurrency and traditional finance, positioning itself as a key player in the evolving digital asset landscape. Market flooded with over 700 copycat tokens after Trump meme coin debut. An analysis by the Financial Times has revealed that over 700 imitation tokens have flooded the market following the launch of a Trump-themed meme coin, raising concerns about potential investor deception. Within just 30 minutes of the original Trump token's announcement, opportunistic developers began launching replicas, taking advantage of the Solana blockchain's architecture, which permits unsolicited deposits into external wallets. Many of these newly created tokens bear names referencing Trump or his family members, such as Official Trump and Official Melania, despite having no formal connection to the former president. The legitimate Trump meme coin, depicted in the chart below, has experienced a 24.6% decline over the past week. According to the Financial Times analysis, at least 167 of these copycat tokens reference Trump's family, with 67 incorporating the term official in their branding. The fraudulent tokens also extend their reach to Trump's children, with 30 referencing Baron, 26 mentioning Ivanka, and 10 including Eric's name. Beyond Trump-related themes, another 35 of these imitation tokens attempt to associate themselves with Tesla's CEO Elon Musk, a known Trump ally. Senior fellow at the Brookings Institution, Ishwa Prasad, warned that Trump's involvement in the meme coin sector has opened the floodgates to manipulation and speculative trading, potentially exposing unsuspecting investors to significant financial risk. The Financial Times investigation also uncovered questionable trading behaviors. In one instance, an account acquired $100,000 worth of a counterfeit, official Trump token, only to liquidate the entire holding 12 seconds later at a loss. Despite some tokens displaying exaggerated valuations, many show minimal trading activity. For example, their official Baron Trump token, which theoretically held a market value of $6 billion based on its most recent transaction, has not recorded any activity since January 21, with its highest recorded transaction totaling only $242. Omid Mail Khan, an adjunct professor at Columbia Business School, noted that uninformed investors struggle to differentiate between authentic projects and fraudulent ones, exacerbating the risks associated with these tokens. The overwhelming volume of newly minted tokens has even impacted cryptocurrency exchanges. Coinbase CEO Brian Armstrong acknowledged the challenge, stating that the industry now sees nearly 1 million new tokens created each week, making it impossible to manually evaluate each one. Armstrong further emphasized that regulatory bodies must reconsider their approach, stating, "Requiring approval for every new token is simply unrealistic at this scale. We need to shift from an allow list model to a block list approach while leveraging automated scanning and user reviews to help filter out scams." To address this issue, Armstrong highlighted Coinbase's ongoing efforts to integrate decentralized exchange (DEX) functionality more seamlessly, ensuring users can trade securely without needing to distinguish between decentralized and centralized trading platforms. Arizona lawmakers advocate for stricter regulations to combat Bitcoin ATM fraud. Arizona State Representative David Marshall has introduced House Bill 2387, a legislative proposal aimed at tightening regulations on cryptocurrency ATM operations to curb fraudulent activities. This initiative follows a case involving Tamara, a Social Security beneficiary from Peoria, who fell victim to scammers impersonating PayPal representatives. As reported by an ABC News affiliate, the fraudsters manipulated Tamara into withdrawing $7,000 from her checking account and an additional $10,000 from her individual retirement account, IRA. She was then instructed to deposit these funds into a Bitcoin ATM under the pretense of securing her finances. Employing intimidation tactics, the scammers convinced her that her bank accounts had been compromised, urging her to transfer the money for protection. Arizona Attorney General Chris Mays highlighted to ABC 15 that cryptocurrency-related scams are on the rise due to the difficulty of tracking Bitcoin transactions. To mitigate these risks, the proposed bill includes several protective measures, such as imposing a $1,000 daily transaction cap, requiring state-issued licenses for ATM operators, mandating refund policy options for users. The prevalence of cryptocurrency ATM fraud has seen a significant uptick in recent years. According to the FBI's 2023 cryptocurrency fraud report, Arizona residents lost an estimated $127 million to digital asset scams, with senior citizens, particularly those over 60, being the primary targets. Data from the Federal Trade Commission indicates that losses attributed to Bitcoin ATM fraud skyrocketed from $12 million in 2020 to $112 million by 2023. Tamara's experience exemplifies a common scam strategy in which fraudsters create a sense of urgency and fear to manipulate victims into compliance. I had a bad feeling, but the scammer insisted that unless I completed the task, the money wouldn't be returned. It felt like a threat, Tamara recounted to ABC 15. House Bill 2387 reflects Arizona's commitment to addressing this growing problem by introducing stricter oversight of cryptocurrency ATMs, ultimately seeking to safeguard residents from financial exploitation. Meanwhile, the adoption of Bitcoin ATMs continues to expand globally. In 2024, the number of these machines increased by 6%, reflecting the growing mainstream acceptance of digital currencies. Functioning similarly to conventional ATMs, Bitcoin kiosks allow users to purchase, and in some cases sell, cryptocurrencies using cash or bank cards, though selling fees are often higher than buying fees. Since the launch of the first Bitcoin ATM in Vancouver in 2013, the market has expanded significantly. Today, there are more than 37,500 Bitcoin ATMs operating across over 70 countries. According to data from Finbold, which references Coin ATM Radar, this upward trend in ATM deployment is expected to continue as cryptocurrency adoption gains momentum worldwide. Crypto investment surge, Taproot Wizards secures $30 million. Reservoir gains $14 million. This week, venture capital investment in the cryptocurrency sector surpassed $105 million, with significant funding allocated to blockchain infrastructure, decentralized physical networks, to PIN, AI-driven solutions, and gaming technologies. The NFT marketplace Taproot Wizards emerged as the top-funded project, securing $30 million, while Reservoir, an infrastructure startup, raised $14 million. The growing interest in AI integration, automation, and blockchain-based gaming platforms continues to shape the industry's investment landscape. Here's a closer look at the major funding rounds in early February, according to data from Crypto Fundraising. Taproot Wizards, $30 million. Received funding from Standard Crypto, Cyber Fund, and Colludery. Co-founded by Udi Wuthheimer and Eric Wall, Taproot Wizards is developing an NFT marketplace on the Bitcoin blockchain. In 2023, the project previously secured a $7.5 million investment from Standard Crypto. Reservoir, $14 million. Raised $14 million in a series of funding round. Backed by Union Square Ventures, Variant, and Archetype. Its technology is integrated with platforms such as Coinbase, MetaMask, Magic Eden, and Zora, enhancing liquidity and trading capabilities. Owners, $13.8 million. Secured $13.8 million from investors including 1KX, Tosca Capital, and Sigil Fund. Operates a decentralized network offering off-chain automation, AI services, and blockchain oracles. Supports Ethereum, Polygon, Gnosis, and Solana blockchains. Superlogic, $13.7 million. Raised $13.7 million in a series of funding round led by Powerledger. Other investors included Sanger Capital, 10 Square, Nima Capital, Acti Unicorn Fund, Hyler Liquid Venture Fund, and Liquid 2 Ventures. Focuses on building AI-driven Web3 infrastructure solutions. Beamable, $13.5 million. Secured $13.5 million in series of funding. Investors include Bitcraft, DeFi, and Blockchain Founders Fund. Specializes in blockchain-powered gaming and content distribution technologies. The game company, $10 million. Raised $10 million in an undisclosed funding round. A Dubai-based company backed by Telcoin, Paul Neuner, and Bullperks. Developed a cloud-based gaming platform utilizing AI and low-latency technology for seamless gameplay on multiple devices. Partnered with Ethereum, which optimizes GPU resources and blockchain incentives for AI processing and cloud streaming. Additional crypto VC investments under $10 million. Fragmetric secured $7 million for Solana ecosystem staking solutions. Prodigy FI raised $5 million to enhance to FI yield aggregation. Flashnet obtained for $0.5 million to expand Bitcoin to FI trading infrastructure. Row Protocol raised for $1 million for derivatives trading technology. Clink Finance secured $3.2 million to develop AI-driven banking solutions. Henlo raised $3 million to support Barricade meme token initiatives. Herd obtained $1.8 million for AI-powered smart contracts. Coin secured $1.5 million through a public sale, reaching a fully diluted valuation, FDV, of $149.9 million. Fraction raised $1.1 million to facilitate real-world asset tokenization. W-Chain obtained $700,000 to enhance Layer 1 payment infrastructure. Multisync secured $350,000 to develop the PIN-related infrastructure. Daemon Network, funding amount undisclosed, is working on NFT infrastructure solutions. Their continued influx of venture capital into the crypto space highlights the sector's ongoing innovation in AI, blockchain automation, and Web3 gaming, signaling growing confidence among investors.